Good evening, guys, and welcome to the recap of Wednesday, the 15th March. There was no trade for me this today. I saw a trade, but wasn't like wasn't sure, wasn't the cleanest, so it was alright. Was not like I missed it, or it was just a trade setup I saw, but didn't really fit the plan in terms of high probability area. So I was cool with it. Um, we can go over it. It was over here in London. Now we just closed New York, or biggest part of New York, the volume part of New York. Actually, you can see it's not the same screens from yesterday. Didn't do much. Today was like a passive day. Did some mindset stuff. Did some reading. Made a made a TikTok post, and that's basically it. Motivational video. Me in the gym. So let's go about it. Weekly wise, we know where we are. Went over yesterday, but essentially tapped into the weekly POI, took liquidity. We have liquidity to the downside. We broke structure over here. Literally did all that with, with my eyes closed. Damn. See, that's how good I know these charts. Um, that weekly demand area over here, or whatever you want to call it, 4 hour daily. Anyway, that demand area over here that took out this liquidity, followed this structure, and then we can see we just came low. Strong push to the downside. Now it's important to see where the daily closes, because by any means these are strong pushes to the downside. This one and this one as well. Compared to this, you can see there's no bullish candles in here. There are bullish candles in here in this retracement, and there are no bearish or there are bearish candles in this retracement, indicating that it bears over are still in the market. While in this bullish or in this bearish move, there were no bulls in the market. As you can see, there were no bullish closures, barely any. Then over here, we got a strong push to the upside and immediately shut down. And we actually took now previous weekly lows. So that low has been taken. Let's mark that on. And we can actually ignore all these areas for buys. Let's clean it up a little bit. So this is not important anymore. This is not important. Oh, actually, this is for these break structures over here. And to see where we reacted from. Same story here. I think it looks a bit better over here. Yeah, tiny bit. A little bit. Yeah. So today, what happened? Asia takes out previous daily highs. We know where we are, right? We spoke about this. Yeah, we did. We didn't tap into this premium, but we came into this 4 hour area of demand of supply that took out this liquidity and then broke bearish. Then we came in there. Did we actually tap the 50%? I'm not sure. Yes, we did. Just about. So we tapped the 50% of the demand area or supply area. And then we turn around, and if we go lower, we can actually see, as I marked it yesterday, we got a kind of a trend line over here. Not the cleanest, but it's not like completely unseen, if I can call it like that. It's not completely it doesn't go completely unnoticed. That's the right word. So I'm gonna talk better English now. It doesn't go completely unnoticed. And then price taps in. So Asia, we take previous daily highs. We tap into that 50-minute POI we got over here. By doing that, so yesterday we took that liquidity over here, and then price turned around and it shut down. I don't know what happened here, because this is London. Is there any news? Was there any news? Whoa, let me. Was there any news that caused this move down? So Asia took them previous daily highs. We tapped into that. We got liquidity building up over here to the downside. we wanted to reach discount of this bullish range. We also knew that as soon as this liquidity was taken, like these bullish breaks weren't the cleanest, especially with all this ranging price. Actually, you can better play on the highs and lows on the like liquidity pulls rather than playing the structures. And I saw someone posting, I won't say names, but I saw Marco. No, but I saw Marco posting on his story where he said like, this is why I moved away from structure. And he's right in one way, but I think if you have the knowledge of liquidity, you are not really bothered by these structure breaks, and you can actually read the market in a way that you know like that these structure breaks are going to happen. As I said, with this weak break, we might turn around. Well, we came deeper, took more liquidity. It was pretty obvious that we could turn around from here and continue bearish because we had so much liquidity over here, and we had this week, and it was quite obvious for me that we would turn around from this area. Although it was possible, and it would be better for us reading price to reprice if we come higher, but yeah, I was expecting price. I literally said it here this morning, where I said inside of the daily candle closure. So let's go on the daily. There you go. Love that liquidity. Previous daily highs and taken, and we tap into that 50-minute POI. So I was expecting price to go lower. Now there was a trade during London, and we are now going over that. Hold up. Distracted. MK simple. Gotta wait. Sorry, bro. Sorry, bro. Gotta wait, MK. I'm doing business. Nah, I'm just chilling. Actually. All right. Oh, that's interesting. There's actually a 50-minute POI. I thought this was already mitigated. Now, if you go lower, I think it's a 5-minute demand. Yeah, there you go. Actually, 1-minute one, not the 5-minute. But what happens? We create some bear structure over here. We take that out. So we essentially grab liquidity, we sweep liquidity, and then we break bearish. Ooh, I'm gonna get distracted by my phone. Let me put it away. Yeah. So liquidity sweep, bearish break. Then we got liquidity building up above the block or below the block. Liquidity. And we actually can see we got a confirmation-based entry over here. So 50-minute POI, that swept liquidity over here. It's not in a like discount of premium. That's the thing. That's why I didn't take it. It was for me, it was a bit in the middle of nowhere. It made sense because we took Asia took previous daily highs, so we can expect price to continue down and not take anything. It also reached the just about reached discount or premium of this bearish move. However, this is not a bearish range because it didn't take any highs or lows. If anything, we are still in this bullish range as I marked out on here. And I still had this bullish range in mind because this low, after we broke this high, this is our low, and that low didn't reach any discount on this bullish range. So I was either looking for longs from here or no longs at all. No longs at all. Sorry for the yawning in my videos. I really, really sincerely apologize. I don't know why I'm yawning. It just happens. And I actually love to talk about this, so there's no boredom or anything. Then going lower again, and let's check out what happened. So we got some early sellers over here. Because we got a high, low, lower, high, lower, low. And then we got some bullish breaks, a bearish break again. The classes is early sellers, liquidity over here anyway. So these are my early sellers. They're taking out strong impulse, and look at that candle after that, a wick again. So if you go to the 2-minute, it's even more obvious. 5-minute. Oh, it's actually 5-minute close, but instantly turn around, instantly indecisive. And then we got the bearish break again, and that's where a 1-minute trade comes from. So the 1 minute trade will be if I'm using my old entry drill or entry way. It's not a drill, it's literally entryway schematic. It will be, if there's a 2 minute, it will be the 2 minute block. So that's already mitigated. So it will be the 1 minute fair value gap. I literally made that rule for me last week. Oh, sorry again. I literally made that rule for me last week, and then instantly we got that new concept which I'm using right now. So we got a turnaround and deep tap. We came above, no, create equals, so that's clean. Now using the other concept which I'm preferring, we got this 1 minute demand, but actually it's a 50-minute POI or 1 minute supply, 50-minute POI. I'm making a difference in that. Separate them, and then we got this low, the liquidity sweep. Let's pull it across actually 50%, and that's where the other entry comes from. Short, so 1 pip breathing room, that's 72, so 62. That's actually, now I get why the guy is at such a huge entry. Above here, 8.5. So to get a 1 to 5, we need to move 50 pips, which is quite a lot. Already knowing that we move, actually that's not that much. 14, then we came down 14 or 16, that's 30, 31, then we come up 16, that's 45, 46, 47-ish. So for London, we don't expect quite that much movement. We already made the most of the movement. So if we break here, you could actually might want to reduce, but you kind of don't, because you got this valid order block over here in this valid area. Did I change something? Nope. All right. So, but 1 to 5 gets hit nonetheless. But so we just reached about here. Coming below Asia low, immediately break even. No discussion. Why we got a bullish range and we got internal range liquidity taken. So after Asia low, you go break even. I would say with the knowledge I had of the higher time frame, I didn't take it because it was not sure. But if I knew that this trade was gonna play out 100% based on the knowledge I had over here about the high time frame, where we are, where we can go, the daily closures, etc., the narrative on the high time frame, I would say target these lows. Because sorry, this one, huh? No, this one, the low of the range, and that's where you take your profits, 1 to 4.5, and where then do you let the rest run? Well, we got this trend line over here, and we actually also know that we want to reach discount over here, so we can just target below that over there, and then that's your partial, your extra 2.2% ish. Yeah, 2.1%, 2.2%, almost 2.3%, 2.4% almost. So that's a good trade, nice trade. Just was not clean enough for me. Was not high probability in terms of the risk to reward as well. So yeah, that's how I didn't take it. Not really fitting the plan in terms of the area, and now with these new demands and everything we're using, yeah, not really for me. Maybe it also has to do with a little bit of trusting your understanding, but rather keep the clean entry drill and go with that, right? So 5-minute wise, you got your liquidity sweep, early sellers come back, and you can use that 5-minute bullish candle as your entry area. buy to sell move. So that's London. We can actually clean up London already. Don't need that. Don't need this. Here we go. No, right. Take this out. We can remove this. We can now we don't need these anymore for the structures because we understand the structures. We can also take out this one, take out these two, keep this one, keep that one, this one. Now for the analysis, use this. This was not true. Oops. Previous daily lows were taken. We can see it slowed down after that, reacting from this, taking this into slow. And of course, that was just a fake out. Price was further down. Sorry for my nose, by the way. It's no, in Dutch we call it a tick. A tick. No, not a tick. A tick. It's like you do it unsubconsciously. Like I just do that. It's annoying. It's annoying other people as well, probably. But yeah, then we come down lower, New York. What happens here? Is there any long entry drill? No. I can say it straight away. Nothing here, no breaks. Here's a break. This is your early buyers. This could be your long. Why would you take a trade from here after such a dump down? There's no need to take a trade from there. So that's all taken out. That's all taken out. Now we got, why is that not showing? I prefer that to be in the hour as well. Coordinates, visibility. There you go. This is taken as well. Let's remove all this. Don't need that. Don't need that. Previous weekly lows. Let's take away this. Now what's that? Oh, that is this range there. We can expand because it's still valid. Let's keep it like this for now. Let's actually remove this and keep it clean. There you go. And then we have our bearish break on a red structure over here, meaning that we can remove this to keep it clean. And then we got our buy to sell move over here on the 15 and 30 minute. So we got this liquidity being taken. For previous daily high. Oh, previous daily high. Quit. So actually, let's do it sweep and then previous daily high. Top center has been taken by price. And then this is our new demand area. Or I just like to say demand. It sounds so nice. Demand. But actually supply. So that's supply area. English is a fascinating language. In it, yeah. In it, bruv. In it, fam. I just imagine what you guys, the few listeners, are thinking when I do these all these voices, all these strange comments. I don't care because I'm like that, but just funny. What are these people? What is this guy doing? He's tripping high on pancakes. See, like that stuff. All right, so we get the break. Mark that on. Yeah, actually, you need to be crazy to trade. To actually put yourself through all this for a couple of years to get the best out of it. But we got a break, and that's basically it. So I'm not trading tomorrow. I'm flying to London. So this is my breakdown of today. What we can expect is price come higher, but I might see price just look at this 4 hour. Jeez. Oh my days. This is the biggest 4 hour candle in since January. That is actually huge. That is huge. So that's a big candle, but it's half the candle. And this one, nope. Holy shit. That candle is insane. Timing is perfect. Oh my days. Oh my days. I'm actually curious when the last time was that we get this size candle over here. This one is bigger with the wicks. That's November. Gee. But that's what with wicks. So this is just pure candle. Dang. All right. So that's taken out. And I see price actually coming below this now. If this is not enough indication that we're going lower first before we're going higher, then I don't know. This might be a huge fake out. All those stops now above here, but I doubt it. I doubt it. All right, guys. That was it. Peace out.